There was very little movement on the JSE today ahead of that crucial decision on interest rates in America tonight. The losses cancelled the gains and the market closed flat. The rand, however, strengthened quite substantially, firming by 1% against the weaker dollar at one stage. Now, any deviation from expectations could cause the rand and the market to swing, but the market has factored in an all but certain, a 90% chance that the US Fed Reserve will announce an interest rate hike at about 8 o'clock our time this evening. Well, let's discuss how important this is. We're joined by Owen Nkomo from Inkunzi Wealth. Great to have you with us, Owen.
Thank you for having me.
So the market is betting that this will happen. We see market futures, polls, but we know what happened with Trump. Could there be any surprise?
No, I don't think there'll be any surprises because well, at least based on what market sentiment is, there's something we call forward rate agreements, which indicates where people want to borrow money from 3 months from now, 6 months, 12 months out into the year. So if we're looking at the FRAs currently, they're pricing in a 96% plus chance of interest rates going up today. And I think, the US is not in such a bad space, so it's not going to be a problem, in my view, for them to increase interest rates. It's just the repercussions around the rest of the world that I'm worried about.
So in the past, exactly, there's been this fear around rate hikes in the US and what it means for us, what it means for the rand. But the rand is having a great year, and it's up today. So explain what's happening.
Yeah, look, I mean, it's not as easy to explain why the rand continues to firm up in a backdrop of interest rates in America going up. But I really just think that people are starting to think that maybe the next place to go to, is probably going to be emerging markets, because with the US increasing interest rates like this, yes, it's great, but unfortunately strengthens the US dollar, which is not necessarily going to be favorable for their exports. So you need to start looking elsewhere. And I do think that the emerging markets indices have been aggressively sold off in the past 2 odd years. So you're seeing the rand firm up. It went to about 13.35 last week and it's come back to 13.04, probably looking to hit 1300. Even in the face of a guaranteed interest rate increase in America, I think that international and local investors are looking at the possibility of more money flowing back into emerging markets.
Which is the opposite of the fear, which is that money has been flowing in, now it'll flow out. It'll go to the United States where the interest rates are higher. So you're saying that's not really a fait accompli?
Not necessarily, because you see, clever money basically expects or lives 3 years from now. We try to think 3 years from now, 5 years from now. If America is increasing interest rates like this and its economy is doing so well, just how many more jobs can they create? And at the same time, we're also worried about Donald Trump, in terms of some of the policies he may pronounce. Is it going to interfere with Janet Yellen at any one point? Is it going to continue to be more aggressive in terms of his stance against his international relations? And if he does, then maybe he could just be the catalyst that we need to see the US market taking a breather, because it's trading at an all-time high where it is. So that could force people to start investing in emerging markets. And by the time you find out that money is moving to emerging markets, it's going to be too late. Yeah.
This is incredible, because it is so opposite to what the doomsday sayers were saying. I don't know how to phrase it. One question that I really want to ask is, this is all about retaining foreign investment. We want foreign cash in our markets. Now, politically, some here would say, why do we want that? Why is it so important to retain this foreign investment?
It's very important because then they bring in the hard currency, Francis, which the country needs quite desperately.
They bring in dollars.
Yes, they bring in dollars, they bring in euros, they bring in the Chinese yens, etc. So it's important for us to have international investors, because we live in a global community, and if we don't have the international investors, we're just only going to have South African investors, and investors from other emerging markets, which unfortunately is not good for us, because it doesn't allow us to diversify our pool of capital raising opportunities. We can't go into the bond markets to look for cash, and if you look at the bond market last year, it really did well, outperformed all the other asset classes. And it's not just South African investors who are investing in the South African bonds. Foreigners were doing the same thing. And if you look at the JSE, if you dissect it, foreigners hold north of 35% of the South African market. So if they were to take their money out of South Africa, they'll do it very fast, and we'll see a very big, a sharp downturn in our market. So we do need to retain them here. We just need to start behaving properly here at home. hashtag SASA. It's not great.
Not helping.
No, it's not helping.
Yeah, and also S&P warning this week again about low economic growth, about politics. So even if the Fed is less of a risk, we have our own risks now, basically.
Most definitely. We're always going to have our own risk. All countries have their own country-specific risks. And I think that some of the challenges that we face as a country could easily be sorted out if we just could start doing those things that would give both local and foreign investors confidence in the fact that we know what we're doing. I mean, this SASA thing is a classic example. It's a bad movie unfolding in front of the world, something that we've known about for the past 3 years, and we are waiting until the last minute to try and sort this out. Are we doing the same thing with the rest of the country when it comes to managing our finances? Are we doing the same thing with the country when it comes to, our political engagements, the promises we're making, guys like the S&P, etc.? Are we going to be able to stick to those? Will we deliver the growth that we think we will deliver? With the Minister of Finance having indicated that he's now looking for growth above 1.3, 1.5 by the end of the year, and we've just seen the last quarter's numbers coming in negative at 0.3% down. The least that we need to do, in my view, is just to continue to control the things that we can control and make sure that we're not tarnishing the image of the country as an investment destination.
Not undermining confidence in ourselves. All right, let's go back to the US Fed, because you said there will be no surprises, so we're expecting a little interest rate hike tonight.
Yeah.
But the big question is, what about the rest of the year? So what's expected, it sounds like 3 interest rate hikes this year. If it looks like it's more than that, that could affect us quite substantially.
No, look, it definitely could, but let's just put it into context. Interest rates haven't been this low in many, many, many decades. Even if they manage to get their interest rates to probably sort of 2% plus, in my view, I still think, yes, it's concerning, and it could weaken some of the emerging markets currencies, because what happens is that people start to look at the US and they say, I'd rather get 2% from America because it's a strong economy, it's showing strong growth numbers in terms of employment, the economy is doing well, I'm much rather get 2% from an economy like that than some of the emerging markets where there's a lot of unpredictability. But I'll throw in the spanner in the wheel and say, you know what, I believe that Donald Trump is more riskier than most of the emerging markets put together. That man puts in front of the responsibility that he has and the authority he has, it could be a big problem in my view. It could just turn the American markets around. So
what you're saying, he's going to trip up, and he's going to trip up badly.
It could happen.
Probably this year, and it'll be good for the rest of us.
Yes, it could be. So in a way, you haven't been in as tough an environment in terms of making investment decisions than you are in right now. We're coming out of a low interest rate environment. We've got a lot of changes in terms of the way that the population is now voting, and the population is going out there and saying, you know what, we're not fools, we're not idiots, we know what we deserve, and they are voting with both their hands and their feet, and I think we need to take that into cognizance.
All right, thank you so much for your time this evening, Owen Nkomo from Inkunzi Wealth. And let's see how this all played out on the markets. A lot of people holding back until that decision tonight. So the JSE closing flat. Here are your main financial indicators.